Dear learners, in the previous session we discussed about various theories of dividend. Having understood various theories of dividend, now let us concentrate on what are the advantages and disadvantages of paying dividend. So, in fact, advantages of and disadvantages of dividend we have already discussed during our discussion on dividend policies. But specifically, what are the advantages and what are the disadvantages of payment of dividend? So, that we will specifically we will deal with now. Now, first of all, advantages of dividend, payment of dividend, signal of financial strength. There is no doubt if dividend is paid or steady dividend or there is an increase in dividend when compared to previous years, it shows a signal that we have seen signaling theory. So, it definitely shows a signal that the company is financially strong, the company is making profit. So, in return, I mean the effect of that usually will be more dividend shows company is performing well, financial stability, financial health of the company, and thereby reputation of the company also goes up, and there are chances of increase in the market value of shares also. So, financial payment of dividend shows financial strength, and it shows that the company is capable of generating profits consistently in the coming periods. So, that is one of the important advantages of payment of dividends, signal of financial strength. Then investor satisfaction, quite natural that if the investors get regular return, that means that they will be happy, investors will be satisfied with the dividend or the income what they are getting. So, in order to satisfy the investors, it is important for the company to pay dividend on a regular basis. Then lower cost of capital, regular dividends may lower the firm's cost of capital by increasing investor confidence and reducing perceived risk. That means, the company is paying regular return in the form of dividend, then it shows we have already seen, it shows a signal that the company is healthy. So, if the company tends to be healthy, then lenders will be ready to pay money to the company with lower cost of capital, with a less rate of interest, because investment for them, lending money to this company, for them it is investment for them, and for them if the company is profitable, then risk will be less. So, they charge less cost of capital. So, regular dividends may lower the firm's cost of capital by increasing confidence of the investors and thereby reduced financial risk. Then another advantage is reduced agency cost. By distributing excess cash as dividend, the company reduces the potential for management to misuse funds. We have seen under theories of dividend, we have seen agency theory. We have seen if excess funds are kept instead of distributing in the form of dividend, then the managers are forced to invest that money. So, if profitable investment opportunities are not there, or if they do not get sufficient time to evaluate various investment opportunities, they end up investing that money in some investment opportunity, and often they may not generate much benefit for the company. So, that is what reduced agency cost means. So, if payment of dividend reduces the agency cost. Having studied about the advantages of dividend policy, of course, it has some limitations also. So, what are those limitations? Disadvantages of dividend policy: reduced retained earnings, quite natural. If we pay more dividend, the retained earnings decreases. So, it limits the growth opportunity of the company. So, reduced retained earnings. Another thing is it may create cash flow constraints, that is, a high dividend payout may strain a company's cash flow, particularly during periods of low profitability or economic downturns. So, cash flow, it may affects the cash flows. Then tax considerations: in some jurisdictions, dividends may be subject to higher tax rate than capital gains, making dividend payments less attractive to shareholders. So, that also can be a limitation. So, even though these limitations are mentioned, but usually these limitations are not major issues, major problems. So, it is always better for the company to pay minimum amount of dividend. Okay. So, having understood about the advantages and disadvantages of dividend policy, now let us move on to the practical aspect of dividend theories. So, dividend theories in practice, what is the reality? Because we have seen major advantages and some of the disadvantages we have seen, but what is there in reality? What needs to be practiced in actual? That is what let us discuss. In dividend in practice, companies often have to balance the theoretical framework with the reality of market conditions, industry norms and shareholder expectations. So, there should be, a company needs to maintain a balance between all these. The expectations of the shareholders needs to be considered. Industry norms. Now, we have already seen that companies having regular income, regular cash flow, they can pay more dividend. Tech companies, technology based companies, they need more cash needs to be retained. So, such kind of companies may not be in a position to pay more dividend. So, we need to consider the industry norms, and also of course, market conditions. During recessionary period, company needs more funds to maintain liquidity. In such cases, the company will have to retain more funds. So, all these needs to be considered. Market condition, market may be recessionary period, industry norms, as per industry norms, tech based companies may have to maintain more funds. That and all is correct, but at the same time there is a need to maintain a balance between these aspects as well as the expectation of the shareholders. So, companies in mature industries with steady earnings like utilities may have higher dividend payouts, while companies in growth industries like tech companies may invest earnings rather than paying dividends. So, this is what the reality is. Now, having understood the importance of payment of dividend, now let us briefly touch upon what are the alternatives to dividend. So, alternatives to dividend means, instead of paying dividend, if dividend is not paid, maybe dividend is not paid because of various reasons. We have talked about the factors affecting dividend policy, etc. So, what else can be given in place of or instead of dividend? So, that is what is called dividend alternatives. As an alternative to dividend, we have the facility of stock buybacks, buying back, purchasing back the shares of a company, stock buybacks. That is, companies may repurchase their own shares as an alternative to paying dividends. This can increase earnings per share. Why? Because if some of the shares are called back, purchasing back. So what will happen? The number of equity shares will decrease, because suppose if 1 lakh shares are issued, in that from that 1 lakh shares 10,000 shares are buying back, means then number of equity shares outstanding will be 90,000. So if number of equity shares decreases, then quite naturally there is a chance of increase in EPS and improve shareholder value, especially when shares are undervalued. So stock buyback is one option. Another option is special dividends. These are one time dividends that companies pay out when they have excess cash or proceeds from asset sales. Special dividends are typical non-recurring. So if the company has a policy that if there is if in any year if some huge profit comes, it may be due to selling of some portion of the assets, or some business is discontinued and that is sold off. From that some significant amount came to the business. In such cases, the company has a policy to pay one time dividend, some amount as dividend, as one time payment. If that is given, maybe in the subsequent years the dividend payment can be less also, but they will be shareholders will be happy, because as and when good income comes, special dividend will be paid by the company. So payment of special dividend is an alternative to regular dividend. Then scrip dividends, that is scrip dividends involve issuing new shares instead of cash payments. So instead of paying dividend in the form of cash, fresh issue of shares, new shares will be issued instead of dividend. This allows a company to reward shareholders without affecting cash flow. So cash flow will not get affected, because there is no payment of cash in the form of dividend. Instead of paying cash, new shares will be issued. That is what is called scrip dividends. So anyway, dividend decisions are a critical aspect of corporate finance that impacts the company's capital structure, investor perceptions, and long-term growth strategies of the company. So as a conclusion, we can say that dividend decision is important in order to maintain a balance and also to ensure profitability and liquidity of the company. So the optimal dividend policy depends on factors like profitability, cash flow of the company, growth prospects of the company, preferences of the investors or investor perceptions, tax considerations, and the company's broader financial strategy. So by carefully balancing these factors, companies can adopt a dividend policy that maximizes shareholder wealth and supports their overall business objective. So that is important as far as a company is concerned. A company needs to adopt a dividend policy which maximizes the shareholder wealth, and it should be capable to support their overall business objectives. So that is what we already mentioned. I already mentioned that a proper balance needs to be maintained. Company needs money for reinvestment. At the same time, the shareholders also will be expecting some minimum return. So a balance needs to be maintained between what is needed for the company, the fund needed for the company for maintaining liquidity, at the same time the expectations of the shareholders. So this proper balance should be maintained in dividend decisions. So with this we will conclude this session. So in the with this, the fourth module on leverages as well as dividend policies is been concluded. So, I hope you had a nice learning experience throughout this session. So, you can also refer the study materials, in that especially the problems and more problems and solutions on operating financial and combined leverages are there in the study notes. And for the examination point of view, this lecture sessions as well as this the lecture notes you should refer. All the very best to all of you. Thank you so much.